Guys, welcome back. I'm excited to dive into this topic because this is something that I get a ton of questions about. If I'm going to start a business, am I going to invest in real estate? What are the right legal structures to have all this done? Now, again, I'm not an attorney, okay? I am a financial planner. I'm not even your financial planner. So these are all things that you can consult. If you are going through this, you consult with an attorney, right? You get qualified legal opinions and expert advice. Okay, I want to stress that. So this is not intended to be that advice, but I want to explain the structures. I want to explain how they work so that you can go to an attorney and say, hey, I think I need this. Tell me what I need. And they can make sure everything is structured properly. But you have to have some base level knowledge. So that's what this is all about. I'm also going to cover some tax, a lot of these legal and tax implication, there are a lot of legal and tax implications tied into this, and they kind of intertwine. So some of these I'm going to talk about the tax implications. I'm mainly going to try and save that for the tax module and just focus on the legal implications, but some are intertwined. You'll get a little bit of both. All right. So number one, a sole proprietorship. This is essentially you. You are your business. You don't need to set up any entity to invest in real estate, buy real estate, invest in funds, start a business. You don't need anything. You can do it all under your own name as a sole proprietor. Okay. And under your own social security number. So it's really easy, straightforward. You just start going and that's it. Okay. So really easy to do, really easy way to get started. The trouble arises when you say, hey, how do I be most efficient with taxes? And how do I be most efficient and protected on the legal side? Okay. So taxes, again, I'm going to cover heavily in the other module, but on the legal standpoint, here's how it works. You have no liability protection when you operate as a sole proprietor. Let's say you start a business, you get rolling, and you're doing some good numbers, right? Your business is cooking. You're still organized as a sole proprietor. You don't need to do anything to organize that, right? You just need to operate in your own name. The business is you, okay? So what happens if somebody sues you? Something goes wrong and there's a lawsuit. Well, the attorneys that are pursuing this lawsuit, they can reach in and get any business assets that you own. But because you are your business, other assets are up for grabs, even personal assets. They can reach through and home, cars, personal checking account, retirement accounts, all that stuff is up for grabs. You have no legal protection against any of that. So that's where a limited liability company steps in, an LLC, right? Everybody's heard of an LLC. Essentially, it limits the liability to that entity, okay? Let's go back on this other example. You start the business, maybe you start as a sole proprietor. You don't know if it's going to stick around. You get going, you're like, okay, yeah, this is legit. I'm going to form an LLC and make sure that all accounts, it has its own, employer identification number potentially, but the bank accounts are owned in the LLC. All the business is done within this LLC. What happens then is it creates this shell, okay? It limits your liability. And so then if somebody sues your business, the attorneys are going to come in. They can access all the assets within the LLC, right? Your business assets, which are up for grabs. But they generally cannot pierce the veil and get through and reach through and grab personal assets, okay? The limited liability acts as a shell, as a shield, protection against that. Now, it's not always the case. Again, it depends on the type of business that you're operating, and there's a whole lot of other considerations, but generally speaking, that's what happens, okay? Now, you can have an LLC and still operate as a sole proprietor for tax reasons, for tax purposes. You can be a sole proprietor still. Everything flows through and you're taxed on your personal return. But you can have everything set up within an LLC, okay? So there's the designation of tax designation and legal designation. Sometimes they intertwine, sometimes they're different. So sole proprietorship on the tax side is you're just taxed as a person. On the legal side, there's no legal protection, but limited liability company, LLC, you have some additional legal protection, but you can still have your tax status be as a sole proprietor if you want. All right, moving on. EIN, employer identification number. Let's say you decide you want to be taxed differently than a sole proprietor for a number of reasons. Self-employment tax being principal among those, which is hefty, right? It's like 15 point something percent, like 15.3%. Social Security, Medicare, that is a hefty tax. So maybe you decide you want to change your tax designation. Same LLC, changing your tax status. you can apply for a different designation with the IRS. So that's when you might get an EIN, an employer identification number. You can easily go get that on the federal website. You can apply for it and receive it in minutes. With the LLC, you just set that up with your state, wherever you are, or sometimes there are different states that are preferential for different types of entities. But by and large, you can just go on there, register a business, get an LLC, get approved, and it costs you the filing fee, so maybe $100, and that's it. So pretty easy to get. You can attain it. You can pay somebody else to get it for you, whatever. EIN, same way. You can go and get it easily. So you can set all this up, an LLC and an EIN. You can set it all up in a day, right? A couple hours. All right. So the LLC offers protection against liability from these assets, but here are how the taxes work out. They work out differently. The taxes are passed on to the owners. These are pass-through entities for tax purposes. So any income, expenses, right? You take your revenue minus expenses and you pass it. Then you take the net revenue and you pass it through the entity, and it goes to the individual who owns the LLC. So if there are multiple people that own it, it's a multiple member LLC, then the taxes are passed through proportionally according to their ownership. If it is a single member LLC, then it's passed through to that individual. Okay. So it could be taxed as a sole proprietorship if it's owned by a single member, or taxed as an S Corp. If you elect to file taxes as an S Corp, you can do that as a single member and receive those benefits as well. Okay. There's tax benefits there for an S Corp. We'll talk about those later, but those are kind of your options. Or you can also choose to have an LLC taxed as a C Corp. Okay. So all of those designations are on the tax side. They don't necessarily offer, they're not legal designations. Okay. They're tax designations. All right. Moving on. If we have a partnership, there can also be partnerships that are formed. And, this is common within the fund space. So if there's like a real estate fund or a hedge fund or a venture capital fund, then generally speaking, they're going to create an entity that is a partnership, and they'll create a limited partnership agreement. There will be one entity that is the general partner, and they are running the show. They are taking an active role in the business, and they are running it. They make the decisions and everything like that. And then there can be limited partners. Limited partners do not have a say in that stuff, generally speaking. The general partner kind of runs it. The LPs or limited partners are just passive. They just sit back. They give the money and then they sit back. So general partner, limited partner. What happens here from a liability standpoint is the limited partner is limited in their liability to the amount of money that they put in. So if you put in $50,000 and the company or the fund or whatever gets sued, you can lose up to only your $50,000. And then your liability is capped. Okay, you're limited. It's limited liability. As a general partner, the general partner they're not limited there. So they can actually reach through and get assets of the general partner as well as their original investment or whatever. So there's a little bit of a difference there from liability standpoint. But as a limited partner, as an LP, your liability risk is limited to the amount that you invest. They're not going to reach through and grab personal assets or anything like that. Okay. Now, you still may, as a limited partner, if you're going to invest in these types of things, you still may set up an LLC to do it. Dave Lowell Investment LLC. And that is the entity. I put assets in there from my own name. I grant assets into the LLC. And then that LLC acts as the limited partner and invests in different things. Okay. So then there's another layer of protection between the assets and the liability. Okay. So you can do an LLC and use the LLC, and that is the limited partner instead of your own name. I'm talking about this in terms of business and things. Real estate would be the same way. If you want to go buy a rental property, you can buy it in your own name, or you can set up an LLC that then owns that rental property. So the liability is limited. If a renter falls, slips, and gets hurt, they sue. You got homeowners insurance covers a portion of that, but there's more liability. It comes through. They can get only the assets in the LLC, not reach through to personal assets. Okay, same thing. All right. The C corporation is a separate designation as well. It can be a tax status and a legal entity, and they're taxed on corporate rates and then pass through, and the different income, depending on what it is taxed on personal rates as well. Okay. But the C corporation, essentially, you can't really own a C corp. Maybe you can. It's not common, anyways, to own a C corp in an LLC. Like usually it's just in your own name. But yeah, a C corp is just a different type of status, legal entity. And you still have some liability protection within that corporation. But you might do this if you are, for example, going to go raise money. You're going to issue shares of stock in a company. So a lot of startups that are planning to raise money organize as a C corporation so they can have shares and shareholders and issue stock. And there are benefits there as well, right? Tax benefits and investment benefits, okay? But that's another type of legal entity that you can have.
Every strong business starts with the right foundation.